Chapter 8, Pricing Power. Who holds the value of the dollar? Part 1, the invisible power behind the dollar. The US dollar isn't just a currency. It's a system of global influence. It's held up not only by government policies, but also by a vast, hidden network of pricing control. Between 2020 and 2023, the Federal Reserve pumped more than $7 trillion into the economy, increasing the money supply by 40%. You'd expect inflation to skyrocket, but it didn't. By 2023, inflation in the US was only 3.2%. How? Because pricing isn't random. It's shaped by a few powerful players: CME Group, Walmart, and Amazon. These aren't just companies. They're anchors of global pricing in dollars. CME sets commodity prices. Walmart and Amazon suppress retail prices. Together, they maintain the value of the dollar and help extend its influence across the world. Part 2, CME Group, the global commodities price setter. CME Group is the world's largest commodities exchange. It handles futures contracts for everything from oil and soybeans to gold and corn. In 2023, CME processed over $5 trillion in contracts, including 7 million barrels of oil daily. When the Fed flooded the markets with liquidity, commodity prices didn't spiral out of control. Oil stayed within $60 or $85 a barrel. Corn dropped 8%. Soybeans fell 14%. This wasn't luck. CME influences not just future prices, but also spot prices, which affect what we pay in the present. In 2020, oil futures even went negative, down to minus $37 per barrel, pulling spot prices with it. This kind of price control helps protect the value of the dollar and shields the economy from runaway inflation. Part 3, how CME directs prices. CME operates on scale. In 2023, it processed 1.5 billion contracts, most of them settled in cash, not physical goods. This creates a huge paper market dominated by banks and hedge funds like Goldman Sachs and JP Morgan. When demand rises, you'd expect prices to rise too. But large funds often short futures, selling them in advance to keep prices flat. This can suppress inflation even when the supply of dollars increases. So, despite massive liquidity, oil barely touched $85, far below its $120 peak in 2008. CME doesn't just trade, it steers. Part 4, Walmart, domestic price anchor. If CME keeps raw material prices in check, Walmart controls the price of finished goods. With $570 billion in revenue and about $500 billion in imports, mostly from China, Walmart has enormous leverage. Despite rising input costs, Walmart forces suppliers to lower prices. Durable goods inflation in the US stayed around 1.2% in 2022 to 2023. TV prices actually dropped 10%. In Europe, where there's no Walmart equivalent, inflation hit 7 to 8%. Walmart isn't just a retailer, it's a domestic shield, protecting the dollar by suppressing consumer prices. Part 5, Amazon, the e-commerce enforcer. Amazon takes this pricing control into the digital world. Handling $2 trillion in transactions in 2023, Amazon uses algorithms and price-matching policies to keep prices low. If a seller raises prices, even slightly, they risk being buried in search results. That creates a race to the bottom. Sellers absorb rising costs, while US consumers pay less. More than 60% of Amazon's international transactions happen in dollars. That reinforces the dollar's reach. Amazon doesn't just sell things, it quietly expands dollar dominance. Part 6, China, the world's biggest buyer without control. China imports over $2.5 trillion in goods each year. It buys oil, soybeans, metals. It's the biggest buyer, but not a price setter. Why? Because nearly everything is priced in dollars. Oil from Iran, priced using CME benchmarks. Soybeans from Brazil, also tied to CME. Even if China pays in yuan, exporters often convert it into dollars to pay global debts or buy machines. For consumer goods, China exports $500 billion in products to Walmart and Amazon. But it doesn't control the final sale price. It makes the goods, but the dollar sets the value. Part 7. Why China can't break the dollar's grip. China has tried. It launched the digital yuan. It promoted oil contracts with Saudi Arabia priced in yuan. But those trades made up only about 5% of global oil trade in 2023. Why so little impact? Because China lacks infrastructure. It doesn't have a global commodity exchange like CME. It doesn't have retail giants like Walmart or Amazon. And without those tools, most of the world still prefers to settle trade in dollars. China may buy more, but it doesn't set the rules. Part 8. Why inflation remains tamed. Inflation is usually measured by the Consumer Price Index, or CPI. In 2023, US CPI was 3.2%. Of that, goods contributed just 0.8 points. The rest came from services like rent and healthcare. Despite the Fed printing trillions, prices on physical goods stayed low. CME controlled oil. Walmart and Amazon pressured suppliers. Without them, inflation could have hit 10 to 15%, shaking global trust in the dollar. Instead, the burden of inflation shifted to exporters like China and Brazil. They sold goods at low prices. They absorbed the costs. The US kept its CPI low. Part 9. The dollar network in motion. Together, CME, Walmart, and Amazon form a hidden infrastructure for the dollar. CME controls commodities. Walmart and Amazon shape consumer prices. Wall Street absorbs liquidity through stocks and futures. When the Fed prints trillions, the money doesn't flood into groceries or rent. It flows into assets, logistics, and pricing algorithms. That's how the dollar keeps its strength, through a system that stretches from warehouses in Shenzhen to trading desks in New York. Part 10. Global consequences, power without production. This pricing system does more than protect the dollar. It reshapes the world. China can make the products, but without control of pricing, it stays dependent. In 2023, the dollar still held 60% of global reserves. It wasn't because of what the US made, but because of what it priced. Production is visible, pricing power is hidden. But it's the hidden power that decides the game. Part 11. The philosophy of pricing power. This isn't just economics. It's a worldview. The US doesn't need to manufacture everything. China can build the factories. Russia can pump the oil. But if the US controls how those goods are priced, it still controls the outcome. CME, Walmart, and Amazon are no longer just businesses. They're the architects of monetary value. The dollar is no longer just a piece of paper. It's the unit by which everything else is measured. In the end, real power doesn't come from owning the thing. It comes from naming its price.